In this video, we're going to start looking at some popular trading mistakes, starting with the biggest one, trading against the trend. Hello, I'm David Jones, and in this latest video with Capital.com, we're going to start going through the 5 most popular trading mistakes. I did a summary in a previous video to this, so take a look at it. So this is really the first step in our series on trading psychology. I think a really common mistake, probably the most common, is trading against the trend. It's human nature, almost, to see a market that's doing this, and rather than expecting it to go higher, to try and pick the top. And of course, the flip side, a market that's falling, plenty of people will get their fingers burnt trying to pick the turning point, trying to pick the absolute bottom. But what are the chances? Let's say we've had a market that's gone up for 2 years, for 6 months, 3 months, 2 weeks, 3 days. It's going up, up, up. What are the chances you pick the top? But I think it's human nature to try and do that. So there are things we can do to instill the discipline of trading with the trend. So we can look at 3 different things. Let's start off with the first one, and that's the obvious one of using a trend line and trading with the trend. So to start exploring this idea of trends, I thought I'd start with a market that I think plenty of us will be familiar with. This is the share price of Amazon. So we're going back here. The beginning of the chart starts January 2015, and I've sort of frozen the chart just up here, July 2017. So we've seen the price go from about $300 a share up above $1,000 a share. So we've seen a 3-fold increase in the price. Now, it could be tempting to think, well, how much higher can it go? And think about selling short up here if we don't have a position, or taking profits. But clearly that does go against this whole idea of going with the trend. So how people will try and identify trends is by the use of trend lines. Let's just pick one up. So in an uptrend, the trend line sits underneath the price action. So something like that. We could also pick up on an accelerated trend from here. But looking at this, even though we've seen fantastic growth in Amazon in 2.5 years, that trend is still up. Okay, so our approach should be to go with the trend, to look for buying opportunities, not at the moment in this one, be looking to try and pick a top. Let's jump forwards and see what happens next. So I've jumped forwards here to the end of 2017, and you see the price has moved higher. It's moved about 10% higher. So it's trading at $1,100, just above $1,100 a share. So going with the trend would have been the sensible thing to do. But again, let's not get tempted into thinking, well, surely it's going to top now. Let's just bring things up to the present day in June 2018. So here we've seen another phenomenal move higher. At the time of recording this, it's trading just below $1,700 a share. So once again, it shows the power of the trend, of trading with the trend. So even up here, I still wouldn't be thinking about selling short, because that trend is still up. In fact, it would take a fall of actually about 50% in value for it to break this uptrend support that's been in place for many years now. So it always pays to look at the bigger picture, try and trade in the direction of the trend, rather than trying to think you're going to be clever and pick the absolute moment that that trend ends. So a very clear trend there for Amazon over the years, and still at the time of recording, that trend was clearly still up. You don't have to jump on board a trend, of course. You can choose to sit on your hands. The golden rule is, though, don't try and pick major turning points in the trend if the trend is clearly going in one direction. We want to try and trade in the direction of major market sentiment. Of course, it is tempting to pick reversals, and they can offer up sort of low risk but potential high reward trading opportunities. But again, the discipline is important here, being able to sit on our hands and wait until we get some sort of signal that maybe things are changing. So let's have a look at one possible one. We're going to take a look at Euro US dollar and the sort of things we might be watching for to see that a trend is reversing. Of course, trends don't last forever. Otherwise, markets would carry on going in one direction for infinity. But it's always tempting to try and pick the turning point. But I'd say if you are tempted, at least wait for the price action to do something different. Here's an example. This is Euro US dollar from April 2018. The price has clearly been in decline. We're coming from around about 124 euro dollar to the right hand side of the chart trading at 118, and it can be tempting to think, well, come on, how much further can it go? But of course, plenty of people would have been thinking that all the way down. So I've put a trend line in place here. So one very simple tactic: at least wait for that trend line to break before we think about buying in to any potential reversal. Let's just jump forwards again. So the price travelled another 200 to 300 points lower, down as low as nearly 115, before we did see a rally that took out that downtrend line. So now we can start thinking about the potential for getting on board a new trend. So we've stayed out of trying to buy when the trend's been down. We've got some reference points to set stop losses, and it's been good discipline to wait for an end to the trend. It doesn't necessarily mean the trend is definitely turning around, but we have a better chance rather than when the market is just falling day in and out. We have an opportunity to maybe buy in and some sensible places for our stop losses. So I think that's an interesting chart, that sort of 4-hour candlestick chart, because we had the price falling for weeks, falling fairly steadily. But when the trend line did break, then that was a reason to start to think, well, maybe that trend is coming to an end. But whilst it was still in the trend line, still falling, no reason to get involved. I think the third thing we can do is take a look at a higher time frame than the one we're trading. I think one of the problems that we all have is we end up being focused on too short-term a picture. So occasionally taking a step back can remind us what the bigger picture trend is. So let's take another look, another currency pair, and have a look at how we might use this approach to try and identify and follow major trends. Let's take a look at the importance of looking at bigger time frames than the one we're trading. This is a 5-minute chart of pound US dollar on a day in June 2018. So the market started off pretty flat in the early hours of the morning, then sells off quite heavily because some news came out that was negative for the pound. Looking at that, you could think, well, the trend is down. Don't forget that this is a 5-minute chart that we're looking at. So all we're seeing here, each candle represents 5 minutes worth of trading. You can see the market's currently trading around about 133.50, 133.52. So we may think, well, the market's going to slide further. But if we take a step out, let's look at the hourly chart just to put this into context. So here we go. I've added a trend line in here as well, but this was the bit we were looking at initially. Okay, so now this is represented as hourly candlesticks on the right hand side of the chart. There's that sharp fall. But look at it in the context of the last 11 days. Okay, it's selling off, but the trend for the past 11 days or so is still up. Okay, it's pushed through the trend line, but overall we don't really have a major downtrend in place. The bigger trend is the uptrend. Let's just jump forward a couple of hours to see what happens next. So we can see the price sold off, we came back to the trend line, and we've seen the price bounce back about 50 or 60 points off those lows. So I think here's an important lesson not to get too drawn in to the short-term movements. Just take a step out and look at the bigger picture before you place the trade to make sure you're going with the right time frame trend for the period that you're trying to trade. So I think that was a good example where we saw one day on the short-term chart of the price falling quite heavily. But if we took a step out and look at the last few days, we could see there was a definite recovery and a definite uptrend in place. And this weakness just ended up looking like a short-term buying opportunity. So there's some examples there, I think, of how we can help instill the discipline in ourselves to trade with the trend. In the next video, we'll look at another popular trading mistake. But if you have any questions or comments or you disagree, leave us a message in those comments down below. If you like the video, click on the thumbs up, and to never miss out on the videos that we upload during the week. We normally upload one a day. We look at markets such as cryptocurrencies, traditional currencies, indices, oil, gold, and sort of market psychology videos like this one. So to never miss out, make sure you're subscribed to the channel and click on the alarm bell notification icon thing to get automatically notified every time we upload a new video. But for this one, on trying to force ourselves to trade with the trend, we'll leave things there. So from me, David Jones and Capital.com, I hope you have a good trading week.